Society suggests a secure retirement requires a nest egg of $2 to $5 million. That massive target keeps the average person working decades longer than necessary, continuously feeding management fees into the traditional financial industry. But right now, there is a quiet demographic of people who have stepped entirely outside of that system. They are living fully autonomous lives, and they are doing it backed by a portfolio of exactly $500,000. Even highly successful, ultra-wealthy investors like Kevin O'Leary advocate for this specific, modest threshold. They prioritize this baseline because they understand that chasing endless capital often creates a new form of entrapment. The difference lies in how you define success. Accumulating luxury goods, cars, designer clothes, and massive real estate creates the appearance of wealth. Actual wealth is the accumulation of choices, driven by assets that produce a reliable, passive yield. When passive yield covers those basic survival expenses, you stop trading time for a paycheck. You've reached the threshold where your capital, rather than your labor, sustains your existence. High-income earners often fail to reach this state because of lifestyle inflation. As their salaries increase, their spending automatically expands to match every new dollar they bring in. This flow model illustrates the two mindsets. On the left, capital is destroyed as money evaporates into depreciating assets like financed cars and daily convenience foods. On the right, cash pools into investments to purchase permanent freedom. The math is precise. If you take the $3,000 a year the average American spends on coffee and convenience foods and redirect it into a standard investment account, that reservoir grows to over $800,000 over 30 years. Severing impulse expenses is not an act of lifestyle deprivation. It is the physical act of lowering the mathematical threshold required to buy back your autonomy. To reach that $500,000 mark, the chronological roadmap starts by cutting those daily impulse expenses to free up $500 a month for your investment account. This scaling phase requires increasing that monthly savings rate to $2,000 as your career progresses and earnings climb. You maintain your initial cost of living, creating a buffer that builds immunity to lifestyle inflation. By consistently investing $2,000 monthly, compounding returns push you across the $500,000 milestone in 18 years. However, placing that into standard safe investments yielding 5% only produces $25,000 a year. For most, that's insufficient for total freedom. Traditional retirement advice suggests you slowly withdraw your principal until it is gone. That strategy fails at smaller capital amounts. To survive without depleting the account, you must shift to a high-yield portfolio architecture. This 3D hybrid portfolio generates perpetual yield. It allocates 30% to blue-chip ETFs, 15% to REITs, and 45% to covered call ETFs. The final 10% outpaces inflation, working together to produce a reliable $4,000 in monthly cash flow. This specific allocation converts a stagnant lump sum into a self-replenishing income stream, replacing the need for a traditional employer. Once you breach that $500,000 threshold, the speed of your wealth accumulation increases. This is driven by the Rule of 72, which calculates how many years it takes an investment to double by dividing 72 by your expected rate of return. At an 8% average return, your core $500,000 principal doubles to a full $1 million in just 9 years. This occurs even as you continue to live off the yield being extracted every month. Reaching this tier introduces new requirements. You must focus on tax efficiency through certified public accountants and establish estate planning to dictate how these assets are managed and distributed. This transition moves you away from surviving day-to-day emergencies and into the active management of a permanent financial shield. Operating without financial scarcity changes how you calculate risk. You can pursue a business venture, travel, or commit to philanthropy because the fear of a zero-balance bank account has been removed from the equation. $500,000 buys something more valuable than a larger house, the ability to wake up without an alarm clock and own your entire day. To learn the exact market mechanics required to build this portfolio and escape the consumer cycle, subscribe to the channel. $500,000 is not just a milestone, it is the exact price tag required to buy your life back from the system.